Hello beautiful people, welcome back. Throughout this whole video, just keep in mind that when it comes to child support, student loans, court judgments, or any amount that comes out of your pocket as your sweat equity, being given to any type of agency, being given to any party because of some order from the agency or supposition of claim against you by any type of entity, all of that amount coming from your pocket is classified when it comes to accounting and bookkeeping as tax and gift. Anything that you are giving any entity out of your sweat equity, anything under any given circumstance, they're all classified as two things: tax and gift. That is the foundational state of mind and intent as to why this video is being created. So as everything is being listened to, correlate it to that fact, and know that that student loan, that child support arrears, whatever it is that you're paying someone else that you know you probably shouldn't be doing, the steps that you're going to take to fix it is hearing, because there are nothing but tax and gifts. We're going to speak of how to begin to get that check back from the IRS that a lot of people want. When people do all these 1040 vouchers, 1099 OID stuff, that accounts for about a good 10 to 15% of what's needed. They then know about some other stuff on the other end, but isolated. A lot of those things are deductions, which is a form of write-off, which is a form of discharge. When you hear the word write-off, deduction, discharge, same thing. There's different terminologies for it. And there's another term called tax credit. Tax credit basically reduces any supposition of what is owed. Tax deduction reduces the base amount which the taxation is being taken from. I explained this on YouTube before regarding entrepreneurs, but I'll briefly go over the definition again. Tax credit. A tax credit is an amount of money that taxpayers can subtract directly from the tax they owe. Meaning, if the supposition is that you owe $2,000 for tax, well, you can claim tax credit. And if you claim tax credit of $1,800, that means, well, a tax that's already supposedly owed, only $200 is left because you're credited $1,800. Unlike deduction, which lowers the amount of taxable income, meaning the amount that that tax is being derived from. So, with that said, in conjunction with the initial statement whereby whatever you're giving anyone, any entity, where they say you owe, in this specific case, child support, student loan, all that trash, they're all considered tax and they're all classified as gifts. One thing you probably notice if you've ever been through child support arrears and all that issue is they want to get your financial statement. Well, that financial statement that they're getting from you is to see, well, how much asset do you have? And if you don't want to volunteer it, we can subpoena it based on your previous self-confession. Now we can do that privately, and they do that. That's how they know where you work at. That's how they know where to get your information and how much to tag onto you to say, all right, start paying this amount. Either you do it by self-confession to them within their kangaroo courts, or they subpoena it to your employees or skip trace your information, which we go over how they do that in different ways on Patreon. Now, what that basically is, when they get your financial statement and look at your asset, they've just audited you. They just assessed your financial value. Like an assessor of a county will assess a property to see how much it's worth, how much equity, just so they could derive from its worth how much yearly taxes, whether it's going to increase or decrease, whoever the supposed owner of the property will pay on that land or house. Literally, just like a tax assessor of your county assesses a property to determine how much they're going to tax from it, they do the same thing with you. This is the importance of why you have to understand how property law works to be able to protect your asset, because they are doing tax assessments on it in order to determine how much child support arrears you are going to be giving them. These are the things that are unspoken in the general public, but is a general mode of operation in the business world. And all that assessment of your financial value, whether you give it to them voluntarily out of ignorance or they skip trace it and do some private investigation of it, all that is considered tax and gift. Are you seeing how everything is connected? And it is considered more so a gift because we went over on Patreon how they already get grants and funds irrevocably. And then once they get it, it's theirs. And guess what? If it's not enough, they can always come back because there's no cap on it. So they're already getting compensated under supposition of the welfare on behalf of the child to step in as a parent's betrayer in the capacity of an executor based on Rule 17, A1, B, G, F. Here, you know what? I think it's best to just show it. Federal Rules of Civic Procedure. Based on this capacity, right here, capacity, real party and interest. They're coming in as an executor, the administrator, child support administrator, a guardian based on parents' betrayers, executor when they go to the Congress and the Secretary of Labor, and based on the Social Security Act. They're coming in as these three capacity, and they're coming in as the party with whom in which whose name a contract has been made for another's benefit. The welfare, the child welfare. And the party authorized by statutes, all the IRS statutes. They're coming under that capacity. So they're already being compensated anyway, based on Social Security Act and other private laws, which we'll be going over. So the only thing that's left, the entire 18 minutes video is on a Patreon. Take care and best of luck.